the fall. Ellen Hughes-Cromwick is a former chief economist for the U.S. Department of Commerce. She joins me now from Los Angeles, and it is good to have you weigh in on what is a very complicated energy picture. You know, we're all transfixed by it for a good reason, right? It affects inflation so profoundly right around the world. So what do you see in 2023, whether it comes to the COVID pivot that's going on in China or these new maneuvers to try and get Russia to really not succeed in getting those revenues on oil?
Yes, I think really in the marketplace, we're seeing all producers use every tool available to increase production. The Department of Energy latest data suggests that we are going to see U.S. crude production rise to above 12 million barrels a day in 2023. And of course, our European allies are working diligently to not only exceed what is possible in terms of LNG import terminals to alleviate some of the pressures of losing the sources from Russia. So that's another tool that's at the disposal of everyone. And finally, I will say, how about all of the above in terms of clean energy? We've seen a significant move by the U.S. and our administration to pass historic legislation to expand clean energy production across the board. And really, that is the attitude we have to take here in the U.S., working with our allies, not only in Europe, but Australia, Southeast Asia, and South America. We need to move to clean energy and expand our production. Now we've got the kind of tools to do that in light of the Inflation Reduction Act.
And I hear you on the Inflation Reduction Act, but I also want to point out that at this point, we've seen the conflict in Ukraine mean that in 2022, we've burned more coal than ever. And then I don't have to remind you how cheap gas is in many parts of the world, including the United States. That doesn't help our transition, does it?
Well, indeed, you know, transitions can be messy. We know that we've got a very complicated energy system globally. And we've seen how many countries have been beholden to a cartel in the form of OPEC Plus and tyrants in the form of what we've seen recently with the war in Ukraine. So we recognize that it is not a straight line conversion from conventional fuels to clean energy in one fell swoop. We know that that's not possible. But what we are seeing now is a recognition that, yes, we need all of the above. We need to continue with conventional fuels as we build out the infrastructure in the system for clean energy, because I think we all recognize how important it is now that we have to get to that transition. So we're starting, it's early days, but nothing more than what Russia announced today is just another reminder that we can't stand back and be a victim to what has materialized, especially with respect to oil and natural gas.
Yeah, I hear you on that, whether it is OPEC in a wider context or Russia. I want to, though, look at the inflation outlook more broadly now, the employment market. You know, mixed signals abound. I don't have to remind you of that. This is a complex environment for central banks. I want to ask you, do you see a normalization in certain markets, whether it's supply chains, the energy market, or anything else in 2023? Because there's a big debate about this. Some people are saying, look, do not look for that normalization in 2023. What do you think?
This is really a central question. I'm so glad you raised it, because we see some early indications that there is an alleviation of the supply chain bottlenecks. Look at the inventory build that we saw toward the end of 2022. We're seeing the fact that, you know, some companies, especially our e-commerce companies, are right-sizing their inventories and bearing down on the excess facilities that they built out to accommodate all of the goods that consumers were buying during COVID. So that adjustment is clearly underway. At the same time, we see ongoing improvements in capital goods orders. Thankfully, because of the infrastructure law that was passed, we see a lot of potential for infrastructure investment in 2023. That should help alleviate some of the pressures in terms of the supply chain as well. But you're absolutely right. This is a long process. It's not going to happen in a couple of months. This takes time when a supply chain is readjusting and accommodating a very different kind of global economy than we saw pre-COVID.
And I don't have a lot of time left, but I want you to weigh in on the labor market. Some say that the Fed will achieve, even if there is a recession, that the Fed will get what it wants, that unemployment won't go above 4.5%. Do you think that's still possible, even if the U.S. does go into recession next year?
Well, let me break that into two pieces. Number one is the Fed will achieve its inflation target of 2% in the medium term, full stop. They know how to do it. They have the tools to do it. And they're in the middle inning of the game to achieve that. How high they have to go will depend on some of the data that we start to see in the first quarter of 2023. Right now, I'd say they have a good fighting chance of not only achieving their medium-term target, I think that that's very likely, but also that they can do it without a lot of collateral damage. I mean, we still have, I think, over 10 million job openings in this economy. So if we absorb this employment loss through these reductions in job openings and we get some modest increase in unemployment rate, that would be fantastic, a great achievement by the Fed if they can handle that.
Okay. Ms. Hughes-Cromwick, we have you down for a bullish prediction then on 2023 and for the Fed. Glad to hear it finally. Happy holidays to you, and I'm glad to have you weigh in with your expertise.